Hi, everyone. Welcome to the 111th episode of the Timing Research Show for November 7th, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and today we will be discussing the 163rd weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Rob Hanna back to host today, so I'm going to go ahead and turn it over to him.
All right, great. Thanks, David. Thanks for having me back again. Looking forward to today's talk. We certainly got some action going on in the market today, and we got some knowledgeable people to talk to as well. So let me introduce who we have here. We got Eric Akins from Gecko Software, Christian Fromhertz. Did I pronounce it right there, Christian?
That's perfect. And a first good guess. First try good guess.
All right. From Tribeca Trade Group, we got James Romelli from Alpha Shark and Jim Kenny from Option Professor, and me. So what I thought we could do to start, just kind of I'll let you introduce yourselves and tell us a little bit about who you are, what you do, and a little bit about your site if you want. And then we'll move on to the more complicated questions, but nobody should get this one wrong. So let me go in the order I got it written down here. Can we start with you, Eric, from Gecko Software?
Yeah, absolutely. So my name is Eric Akins, and I've been doing this for probably about 13, 14 years. And we typically specialize in seasonal trends and market cycles. So the name of our website is just Trade Miner. I guess a little promotion or special that we're going to do. So I'll send you out a link, all the attendees here today as well. But I appreciate the invite. Glad to be here.
All right, great. Christian, want to introduce yourself? Tell us a little bit about what you do at Tribeca Trade Group there.
Sure. Thank you very much. And yeah, again, my name is Christian Fromhertz. And I was an institutional trader. I was on Wall Street for about 15 years as a senior trader on Merrill Lynch's Delta One trading desk, as well as ETF trading desk. And I started Tribeca Trade Group about a year ago. And, really what I've done in the last year is kind of brought everything that I like about a trading desk, institutional trading desk, over to the retail side. So, we concentrate on unusual option activity or aggressive option activity. We also concentrate on day trading, swing trading in our room. So the live trading room is open from 8:45 in the morning till a little bit after 4 o'clock. And yeah, so it's TribecaTradeGroup.com, and appreciate being a member today or on the call today. Thank you.
All right, thanks, Christian. Let's move on and talk to James Romelli a little bit. James of Alpha Shark, and you want to give us a little bit about your background, James, and what Alpha Shark does?
Sure. So I've been on the show more times than I can count at this point. But here at Alpha Shark Trading, me and the other moderators that we have in our live trading room spend our days focused on the tape and tracking unusual options activity. So basically what we do is use a piece of software that we developed called Option Hacker to pick out big institutional order flow and glean information off of that order flow about what it is big money is thinking is next for the market, either on a sector per sector basis in individual equities. And also we combine that with some analysis of catalyst events as well ahead of earnings and technical analysis using some simple technical indicators. So that's basically what we spend our time doing here. That's typically what I like to talk about on the show. And yeah, that's Alpha Shark Trading in a nutshell.
All right, great. We got a couple guys that look at unusual options activity, so this should be interesting. And Jim Kenny, Option Professor. So we've got a few guys here. Jim, you want to tell us a little bit about your site? I know we've been on together several times before, but you can introduce yourself better than I can.
Okay, thanks a lot. As far as the Option Professor is concerned, it is an educational site and basically tries to explain the uses and the risks of all the different strategies that people might consider. both for cash flow as well as limited risk speculation. And we try to give you a little bit of the idea on how the strategy works, what is the use, what's the risk, when you would want to possibly consider it, when you wouldn't, and if it goes your way, what your next moves might be, and if it goes against you, what your next moves might be. But try to give you a fairly comprehensive view on how the different strategies work, be it outright buys, be it spreads, be it strangles or two-sided trades, covered call writing, put writing, and other type of tactics that people might have an interest in, but maybe don't have full understanding of. So we try to give them a hand with that kind of stuff.
All right, great. So we got some interesting guys to talk to today, and you got me too. A little bit of background on me. I'm Rob Hanna. I've been around for a while. I wrote for a site called Trading Markets back in the early 2000s. In 2008, I started a site called Quantifiable Edges, and I still run that site. It's focused primarily on swing trading using a quantitative approach. In 2012, I opened a site called Overnight Edges, and that took a similar approach, or another type of quantitative approach, I guess I would say. And it just looks to trade the overnight market, and that merged a couple of years ago with InvestiQuant. So Overnight Edges is no longer on its own. It's part of InvestiQuant, where we look at intraday trading, overnight trading, swing trading on a quantitative and systematic approach. Without further ado, let's get to the questions, I guess. So let's start with, let's go in reverse order, if that's all right. We'll start with Jim from Option Professor. And just if you could give us an idea of what you think for this upcoming week, higher or lower, and what kind of confidence you have in it. Now, this is a trick question this week because...
Yeah, really.
Normally, it's, the question says from Monday's open to Friday's close, and I'm normally thinking in terms of from Friday to Friday. Big difference.
Right.
We gapped up over, what was it? Over 1% this morning, wasn't it?
Yeah, at least
just about 1%. It looks like for the SPY.
Right.
Yeah.
So obviously we have a momentum going on the upside, and obviously huge order imbalances out there, really across the board. And you have a market like the transportation average that's up 2.5% or better, and also breaking out above the recent highs, looking like it really is trying to go someplace. And so obviously the momentum has turned to the upside. Now the order imbalance, how many days that's going to take to kind of settle down, that's a big unknown. But certainly fighting the tape coming out of a correction with this type of momentum would be a little bit dangerous. So I think if you had to say which way it's going to go as the week unfolds, it does look like it wants to go higher. Whether that order imbalance will get settled by Thursday and start reversing down before the long weekend, we don't know. But I would say the odds are that it is trying to go higher here. And, obviously people are a little bit more happy that it looks like Hillary's, going to have the election than they were, thinking that maybe it would go the other way. So that would be my 2 cents as far as now. And that's what I think. Higher until further notice.
All right, great. And can you put a percent of confidence you have on that for us?
Yeah, I mean, right now I would say it's got to be at least in the 60% area.
Okay. All right, thanks, Jim. So we got one bull. James, let's go to you. What do you think for this week? Higher or lower?
Right. So I think my answer would have been completely different if we weren't up 44 handles right now in the S&P futures. But here we are. And to be honest, I think that this move that we're looking at right now is completely ridiculous. So overdone. If we were taking a look at what options markets specifically were implying for this week, this past Friday, I mean, we've got 90% of that expected move happening right now, and we haven't even gotten through the big catalyzing event for the week yet. Citigroup came out with a note over the weekend or on Friday, I think it was. It said, Trump wins the election, 5% broad-based correction in the entire market. If Hillary wins, no change. And here we are up 45 handles. I think that all the selling pressure from last week is getting wiped out today because there wasn't any big news release over the weekend. I think a lot of people were expecting there to be some type of development with the emails, some new poll or something like that, but we didn't get anything. And now the market is like completely discounting the fact that, you know, Trump is still running. They're basically saying that Hillary's got this thing locked up. But I mean, if you take a look at where we are right now, I don't think that that's a safe assumption to make. I mean, everyone was really wrong one time already this year about something that should have been a quote unquote sure thing. I think it was 2 weeks ago, some of Nate Silver, election pollster and statistician, said that Trump had about the same chances as the Cubs coming back from a 3-1 3-1 deficit to win the World Series, and we saw what happened there. I really would be very, very cautious about getting long here. They're still looking for about 50 handles between now and Friday in the S&P. I think that if Hillary wins, which is obviously the most likely scenario at this point, that you know, we're not really going to see a whole lot more upside here. And as we get into the rest of this, I'll talk about a little bit more about why there. But given the move today, I'd be looking for sideways to slightly lower action into Friday.
Okay, good. We got some dissension. So sideways to slightly lower is confidence level there.
Probably about 70%. I'm not going to be looking for any new longs today, and we'll be watching the tape for any good opportunities. I think today would be a good day to get short names that are looking weak anyway, technically, or you know, because of bad earnings that they have had recently. I think this could be a good opportunity to pick up some names like that to the short side.
So Christian, how about you? We got one bull and one bear so far for the week. Where do you stand?
I like it, and a lot of differing opinions, which you know, I think is also why we have some indecision in the marketplace right now. But excuse me, I'm going to go the other way, and you know, I think so. I'm going to be positive for the week. I think we end up higher. You know, of course, today I think, like everybody knows, is a huge move and a little bit difficult to buy into this market when it's up 2%. So we do have this, you know, this slightly small event for tomorrow. So we'll see how that goes. You know, what we've been advocating in our trading room the last couple of weeks is, you know, we were kind of thinking that there was going to be a sell-off last week, and I've been advocating high cash. A higher than normal cash balance in the last 2 weeks, and I've been advocating that in our newsletter. So now is the time, and I think that's very much what we've seen kind of in institutional trading. There has not been a lot of aggressive call buying in option flow. The earnings names that we've seen have come out that have beaten earnings. They haven't had any momentum to them. This all makes perfect sense to me. It just doesn't. It seems like the institutional investors don't want to go in with 2 feet right now, which, again, we've got a very huge event to get through. So I think there's a lot of cash on the sidelines. One of the things that I do is I track ETF fund flows on a day-to-day basis. For the most part, over time, money's been added into equity ETFs. The last week was the first week out of two consecutive weeks where we've actually seen equity outflows of $5 billion coming out of the equity market, some money going into short-term treasuries. Again, this makes perfect sense to me. People just don't want to be, you know, the equity market does not like uncertainty. And there's been a ton of uncertainty in the last couple of weeks, especially with where the polls have been 50-50. I don't blame anybody for not really going into the market the last week and having, you know, while we've had 8-9 days of sell-off into today, it's only been you know, a negative 2.6%, 2.7% up until today, which obviously is a snapback. But that just, to me, makes perfect sense. And I think momentum will eventually come back into this market once things get sorted out in the political arena. So I would say for this week, 70%, I think we're going higher. Just one final thing. I also am very much a macro trader. So these other things outside of equities, things like, well, I guess transports would still be included equities, but transports have been very strong. You look at copper, it's extremely strong. You look at iron ore, you look at the Baltic Dry Index. These are all positive things, and it doesn't show that the global market is slowing down is what everybody fears. I think that people just kind of took took their foot off the accelerator with buying over the last 2 weeks.
Okay, so to follow up with you on that a little bit, you mentioned that you think there's a lot of cash on the sidelines right now because you're not seeing a lot of call buying aggressively and in
the cash market as well. Not
right.
seeing. Yep.
So, do you believe that you're anticipating the market's moving higher this week? Do you think it could be a big move because we got all this cash on the sidelines, and after the election results are final, we'll get a push in?
No, I think it's going to be. You have to just kind of put yourself into the shoes of a portfolio manager. I think portfolio managers don't jump in at all one time. They look for little opportunities here and there. So they're going to, they're going to go back to, I'd say all the names that have had earnings, and I'm sure they've done their analysis on what names look good to them. And I think they're going to go back a little bit at a time. So I don't think we're going to see, a major, huge rally, but I think we're going to continue on. And I think we're setting up nicely for the end of the year.
All right, good. All right, Eric, didn't mean to ignore you for so long.
That's okay, I'm here.
All right. How about you going to make this a tie that I have to break, or we're going to all gang up on James being a bear there? What do you think, Eric? Higher or lower this week?
James, I'm going to gang up on him just a little bit. So I think you're going to see something a little bit higher over the next couple of days. I imagine tomorrow's going to be pretty flat. A lot of people just playing the wait and see, who just mentioned that a lot of cash on the sidelines. I completely agree with that. There's probably a lot of wait and see here over the next probably 2 days there. I'm going to anticipate, a couple things that happen during this week. I'd say, yes, tomorrow's going to be flat. I would imagine, depending on the outcome of the election, which, we kind of have a couple good guesses there. Wednesday would probably be a good trading day where it's going to come up. Over last week, we can see that everything was down, which is actually against the seasonal trend. It's bucking its seasonal trend, so going to continue to do so. Here at the end of the week, I'd imagine we're going to be up just a little bit, but not by a whole lot. You'll probably see some sort of correction from today's jump, Thursday, Friday, and we'll end up a little bit higher, but I wouldn't say by a ton. So.
All right, interesting, yeah. And I'll throw my 2 cents in here as well. I'm bullish for the week, but not overly. So yeah, James, we're ganging up on you.
That's good. When everyone thinks the market's going higher, that's the best time for it to move lower.
And I'll tell you, I'm glad you're here. I hate it when everybody agrees. The VIX broke a record on Friday, having closed up 9 days in a row. And although it wasn't a huge move, kind of like the S&P and the NASDAQ were down 8 or 9 in a row. I can't remember which it was. But it was the first time the S&P had done that. I think it was 9 in a row. Had done that since 1980. It had done it several times in the 60s and 70s. But it just isn't you don't get those kind of runs over the last 35 years or so. So that was interesting to me. So I'm not surprised that we got such a reaction after the after the news yesterday, where the FBI is saying, no, we're same as it was in July as far as the email thing. And I'm not surprised that we're seeing a run higher off of the open either. Generally, when you have an oversold market, and by just about any definition, it was short-term oversold coming into Friday, you get a big jump up like this on, you will often get a bunch of bears that are trapped, right? And so that'll run them higher for that day. Will it continue for the next several days? Who knows? I think it was Eric that said tomorrow will probably be quiet, and I wouldn't be surprised if that was the case. You get, when news is pending that day, a lot of times things do get quiet. Look at Fed days before the announcement. They tend to not move a whole lot, not a whole lot of volume, and then the volume comes out at the end of the day. So we'll probably see the movement in the volume on Wednesday. And so far the market's been saying it wants Hillary. But I think it was kind of the same thing with Obama. And the days that he got elected and the days he got inaugurated were some of the worst market days. Like it reversed way down and acted like it didn't like him. So I don't think it's a sure thing that a Hillary victory will be a rally on Wednesday, but that's what it's been pointing to so far. I think we're more likely than not to see continued move higher. I think we got some short-term bears trapped, and I think we got some momentum to the upside right now. So I'd look for it to move higher this week. So that's kind of where I'm at. Let's reverse order a little bit, and I want you to talk about some things you'll be looking at this week as far as indicators that are leading you to believe, it's going higher or lower, or if there's anything else that you're going to be keeping a close eye on, I guess, almost other than the election. I mean, is there anything else that matters a whole heck of a lot this week? I don't know. Although that I would say, if you're a technical trader, the election may just be an excuse to move where it's going to move, right? So, Eric, let's start with you. Go in reverse order again here. Are there certain things you're looking at this week? Technical levels, fundamental news, reports, anything like that? Or you can talk about the election more if you want.
I appreciate it. So a couple of things I'm looking at is support that's bounced around that $2,100 mark on the S&P, and with that big move that we've had so far, with tomorrow's kind of just dead day of trading, not a lot going on, a lot of people watching TV in the market. I would take a look at a couple of if tomorrow on Wednesday, if it opens up quite a bit higher, I would anticipate it would continue that way for the remainder of the day. And reason being is, if you take a look at a particular day, 12 by the last 20 years, it has been a high. So we're going to anticipate that that's going to remain the same and continue to do so. But that would be my biggest move. If it doesn't happen by Wednesday, I wouldn't imagine much of an up. Again, I kind of see Thursday and Friday as just sleepy days when things are you have the initial reaction, and then again we're going back to the wait and see come Thursday, Friday. That would be my for this upcoming week. Again, looking at what the market has done year after year, taking a look at those probabilities, and then also looking at that area of support there on right around 2,100. It's come down and tested that a couple times here since September. I don't anticipate it move for the week, but that's where I see it.
Okay. Yeah, you mentioned Friday as well. It sets up for an interesting week because, Friday being Veterans Day, stock market's still open, but the bond market's closed. And a lot of times when that happens, you end up with low volume, quiet trading. And you get a fair amount of stock traders taking the day off too. So it's unlikely we'll see some big volatile moves on Friday without the bond traders around.
Mm-hmm.
Christian, what about you? What kinds of things are you looking at for this week?
Yeah, sure. Let me just grab the screen. And one thing I can assure you is I do not want to talk anymore about the election. I think probably all of you feel the same way. So happy to get this thing over with tomorrow and on to the next big thing that everybody is probably waiting and seeing, which could be the rate hike. But for technical levels, I know this call is based on where we think the S&P is going this week, and I'm looking at the weekly bar in the S&P, and what we look at in terms of technicals in our room is volume at price, and what we're looking at is the yearly value area, which is all in here, which is where we've been above basically since June and July, and when I was bearish last week, I said, hey, this is a big break of the value area. We're now trading in value. So this is a weekly bar. We don't know how this thing is going to close. But what the level that I'm really watching in S&P futures is 2117. For those who look at SPY, kind of same thing, but I think it's about 212.5. So come the end of the week, if we're back above this level, again, I have my bullish hat on after being bearish the last 2 weeks, and if we remain above 212.5, you know, I think that's bullish, and the uptrend continues. However, you know, if we are negative for, you know, a couple of days this week and we're back below value, then, you know, I have to just kind of tell myself it is what it is, and we're in the value area for the rest of the year, which would not be a good sign. So that's one of the things. That's a level that I'm watching out in the S&P. You know, one of the things that kind of got me bearish last week and the last 2 weeks was small caps. So what I'm really looking for, I often think small caps kind of lead the overall market. It's more of your risk on. So I really want to see small caps continue to do what they are doing today, what they did on Friday, and lead the market higher. And that's a good area. That's a good spot for me to watch if it's completely risk on market. And then third is, you know, and I tell this to our subscribers all day long, you know, you don't have to jump into this market with 2 feet. If you're watching option activity and aggressive option activity, you're going to see the order flow right in front of your face. You're going to see aggressive call buying and momentum names. You're going to see them into beaten up names. You know, what I'm looking for is buying, and, you know, consumer discretionary has just gotten blown apart. I want to see dip buyers coming in there, maybe into industrials as well. But, you know, if you watch order flow, you're going to see that aggressive activity instead of names like in gold and gold miners. You know, that is another indicator that I'm watching as well.
Okay, interesting. The move out of the value area and then now back into it, do you view that as kind of a potential fake out that could launch us higher?
I do.
Or do you not have those kind of fake outs with the way you look at things with the value areas and the volume?
I think with the yearly chart and looking at the yearly value area, you could have a fake out into value. I just think that we were due for a little bit of a correction,
okay.
You know, the last couple of weeks. So that's the line in the sand for me. So if we get back above that 2117 level, I think I'm all good and want to continue to be positioned to the long side. If we can't break it, I would say, you know, high levels, I'll go back into cash and kind of, you know, day trade a little bit more.
Okay, great. James, what kinds of things are you looking at for this week?
So I also kind of keep my eye on value areas. One of the things that I'm looking at is the value area for the month. We slammed below it last week in the S&P and had already been below it in NASDAQ futures. But we're testing up to it in the SPOOs today without really showing much conviction to break back into value. So in the shorter term, Chris was taking a look at kind of where those things are implying we move through the end of the year. But in the shorter term, I don't think it's quite as bullish as what Chris's chart would show there. I think that in NASDAQ particularly, we haven't really tested back up to important levels just yet. I think that amidst all of the election talk, that we kind of forget that, you know, last week and the week before, we saw some pretty disappointing performance from some of these big momentum names that reported earnings, right? It's like, did we forget about that? I mean, Apple, Facebook, Google, Amazon all just got crushed on earnings. And
yeah, they were hurting after hours. It seemed like every day for a while.
Yeah, absolutely. And I mean, we didn't really see, you know, those names are recovering today pretty strongly. We're seeing some big moves in a lot of those stocks. And, you know, I don't really, other than the broader move in the market, I don't really see a reason for that to be happening, which is why I think that today's move is a little overdone. We're going to get through tomorrow. We'll come in Wednesday morning. Hillary will be the president-elect. And then what's the catalyst for a move higher there? I mean, we're going to have a lot more earnings this week. They've been disappointing in a lot of important names so far. So I just think that, you know, it's kind of like a buy the rumor, sell the news situation, right? I mean, we're up so much today for an event. Like, either it's going to play out like everyone thinks it is, and in which case, what's the catalyst for us to continue higher, other than, you know, the technical levels that we're touching here? I mean, earnings aren't really going to be giving us a reason to move higher, right? And if the big out of nowhere black swan surprise happens, then we really move lower. I mean, I've positioned myself mostly in cash because I just don't think that I think there's very little money to be made being long through the end of this week, and a possibility for a lot of money to be made being short. But at the same time, I would, I'd have some small positions on. I think Chris mentioned some gold miners. I'm long some GDX calls. We tracked a lot of really huge order flow in short-dated GDX options last week. So I'm long some of those. But, I mean, 87% of my book is in cash right now because I just don't think that there's much of an opportunity to hit any home runs through tomorrow unless you want to be short and really think that Trump can take it away.
Right. So in your view, basically the Hillary wins market celebration is happening today.
Right, absolutely. And if you take a look at what we were pricing in last week for this week, I mean, this is it. This is the move. This is what they were looking for. They were looking for, and it came in a little bit because it was probably a little inflated too because broader market volatility on it. You said a little earlier there, Rob. I mean, VIX was bid day in and day out all last week. And I mean, we were looking for, at the most expensive that straddle got for this week, it was about 60 points. I mean, today it's about 50, but I mean, we're up 45 right now. I mean, that's every bit of the move that they were expecting. So I think that volatility, unless Trump wins, which I think a lot of statisticians have Hillary like a 2-to-1 favorite right now, all of us have seen things that were way bigger of a long shot happen in this market on a weekly basis, right? But I think that once we get in tomorrow, volatility is going to pop like a balloon, and there's not really going to be that much upside left.
Yeah, no, I can understand where you're coming from there. But Jim does not agree at all. Jim, tell us why.
Jim Kenny. There are a lot of Jameses running around. Is this Jim Kenny now?
Yeah. Oh, I'm sorry.
All
yes,
right.
that was James. I didn't even think of you as having the same names hardly. I wrote down James and I wrote down Jim. Jim Kenny, yeah. What are you going to be looking at this week?
All right. Well, here's my best guess, and I'll give it to you here. Sometimes we have turnaround Tuesday, and sometimes we have turnaround Thursday. So what I would be looking at right now is turnaround Tuesday, which would be tomorrow, where it's a buy the rumor, sell the fact. And that would possibly keep us somewhere right in this region of 2130, 2135 on the S&P.
So wait a minute, Jim. When you're saying tomorrow being a turnaround Tuesday, are you saying?
I'm saying if we come in tomorrow and the market starts meandering or has a pullback, because there is a gap now between 2090 and 2100, and obviously sometimes those gaps are almost a bit of a magnet. Okay. And so if we come in and it's a buy the rumor, sell the fact deal on turnaround Tuesday, then it maybe this 2130 area that we're hitting here today, 2135, might see a pullback off of it. If not, the next thing I would look at would be Thursday area. And then I'd raise that price to around 2165, which was last month's high. So if you wanted to look for a pivot point, this neighborhood here that we're into is one neighborhood. And then the next neighborhood would be last month's high, which is the 2165. And so those would be two things that I was looking at. I obviously study the options quite a bit, so this rally is not that surprising to me for a couple of reasons, and here's what they are. Last month's low was 2107. On Friday, they took out the lows. Obviously, people who buy puts are now buying them like crazy, and people who sell calls because they think it's not going to go up or are selling them like crazy. So you always ask yourself, who's on the other side of the trade? And in that case, you might be looking at a lot of market makers who are collecting very huge premiums. The end of the month options for November on Friday, the index was at 2050, right? So the 2030 puts were going for almost $28. And that's 50 points out of the money underneath. And the calls at 2130 were only going for $16. So obviously you can see a very slanted thing to the put, telling you that the puts are extremely fat. Now, today, those puts have lost well over half their price in one day. So obviously, that was an indicator to me that we were a little bit leaning a little bit too far one direction, and that they had an ability to take out last month's low by a little bit to obviously run some stops and get people a little bit leaning that way. Now, Comey comes out a Sunday night with this, everything's beautiful in Clintonville. And obviously everyone who's leaning that side is trying to obviously cover, and there's no volume on that side at all. So you can see why we have such a big rally is there's nobody who wants to take the other side today, and everyone was leaning the other way. Now, obviously, after that volume is taken care of, you have to wonder who's behind it. And if there's nobody behind it, obviously that's what makes it difficult, as some of the guys are saying, to get much follow through. Because if the rally is just a bunch of people covering their shorts in a panic and market makers taking their action in, there has to be volume behind it to keep the darn thing going. So basically, those would be the pivot points that I'd be keeping an eye on here. And those are the days that I would keep an eye on it, which would be obviously Tuesday and Thursday. And like you guys are saying, the banks are closed Friday and people might be taking a long weekend. So if it is up in that 2150, 2165 area, and these people want to go back to the Hamptons with money, sometimes maybe they'll ditch a little bit of their positions before they take off.
Okay. All right. As far as things I'm looking at, I was looking at a lot of oversold type indications coming into the week. So I was looking at, the rising VIX and the fact that that was hitting multi-day highs. I mean, highs multiple days in a row, and it was at a 50-day high. The S&P was down near the bottom of its range and closing poorly almost every day, and it was a day after day type thing. And then we didn't get any kind of Fed rally last week. The Fed day was bad, and the days after it were also bad. Normally, on a Fed days, 2 out of 3 times you'll see the market move up on a Fed day, and if it doesn't, you'll normally see it move up the day after or the day after that, and it didn't last week. It just kept going down. So for a multitude of reasons, I was getting along all last week. And in both the Quantifiable Edges subscriber letter and in the InvestQuant letter, and then I'll be exiting those positions today and tomorrow most likely, because frankly I don't know what to think of how the reaction is going to be to the election. I know there's going to be a reaction. I think from my standpoint, my play is going to be, let's see what the reaction is, and then play that rather than bet ahead of time on what I anticipate the news is going to be or what the reaction to the news is going to be. One thing I did find interesting from an intermediate term standpoint last week was that the NASDAQ, which had been leading the S&P since early July based on the indicator I use, finally fell into a lagging position at the end of last week. So basically just meaning it pulled back harder. And that's something, I can't remember if it was Eric or Christian mentioned, that they look at the Russell compared to the S&P, and that had been lagging. I think it was Eric. Was it you, Eric?
It was me. It was Christian. Christian,
okay. And I find the same thing. I look at the NASDAQ, not the Russell, but you really can use either. So I'm interested to see if this week, if it does rally, will the NASDAQ retake the lead, or is it going to just kind of wither away? In which case, from an intermediate term standpoint, I found that you're much better off having the NASDAQ in a leading position than a lagging one. Both for the NASDAQ's potential to rally and the S&P's potential to rally. It means you got the more, like you were saying, you got the risk on, the more aggressive approach, the more bullish attitude from investors, and you're able to push the market higher. So let me move on to the last question here. Which I think we've already talked about quite a bit, but we didn't get specific on it at all. So it is, have you already, or are you planning to do anything in your trading investing accounts to profit from Tuesday's election? we haven't talked. Next month we won't have to talk about the election at all when I'm in here. Assuming it's over by then, right? In 2000, it was still going on. 2 or 3 months later, so
the hanging Chad possibility, right?
Exactly. Hopefully, Florida votes correctly this time. That's what I'm hoping for.
Get those Chads down.
Hey guys, I was just thinking we can kind of combine this with the usual free trade idea or suggestion that we do on the show now too. So if you want to talk about either this question or give a trade idea or both.
Yeah, it's a great idea, David.
And feel free to, of course, share your screen too if you have anything you'd like to show.
So let's start with let's mix it up. Let's go to James Romelli. And James, if you want to share a trade idea or at least just how you're handling, if you're doing anything different based on Tuesday's election, or if you get a trade idea for the week that you want to share.
Yeah, like I said a little earlier, I mean, I really don't have much on right now, because I think what you described, Rob, is probably going to be pretty close to how I go about this. And, you know, in the big catalysts like this, I think it's really difficult to read market direction. And the fact that, you know, we're up so much today, but options prices are still not what we would consider cheap, right? I mean, they're still looking for a pretty decent sized move between now and Friday in the indices, one that I don't think we're going to get. So that makes it difficult to play anything with options. So like I said a little earlier, right now I have on some GDX calls. We saw a lot of order flow into those last week. GDX is around $24 right now. They bought the Nove 28 calls last week in a couple of really large blocks. One of them was 45,000 contracts that they bought on Thursday of last week for about 30 cents. They're like 11 or 12 cents today with the market rallying. So I wouldn't be looking to add to those. But I mean, that's a good example of the type of thing that if I were to see something similar to that come across the tape today, I might throw a little bit of risk capital at it. Like I said, I don't think that there's that much of an opportunity to profit unless I want to throw some real, you know, flyer type short positions on and, you know, maybe see a Trump victory and a market correction. But other than that, I think the way to go about this is to just see what happens and then take a look at what the tape gives me after that, right? I can track institutional order flow into the catalyst, but that doesn't mean that, you know, they're right or that they're going to be right about what happens. We saw this happen ahead of the Brexit. There was quite a bit of order flow going into that. Everyone was very convinced, and a lot of those institutional traders got buried. So I'll be looking to see where they come in on Wednesday morning and throughout the rest of the week and put on plays to look for follow through, whichever direction it is that we are moving. And, you know, that's pretty much going to be it. So unfortunately, I don't really have a really good answer for, you know, what type of trade I would put on here, because I don't think that there's really an opportunity for, you know, a really solid trade setup until we get through the catalyst and see how markets respond.
Okay. All right. That's definitely a fair and I think a good answer there, James. So let's move on to Christian. Christian, are you planning on doing anything in your trading, you know, to profit from Tuesday's election, or do you have another separate profit idea for the week that you want to share?
Yeah, so I've got two things here, and one kind of, you know, this was an idea that we put on in our trading room on Friday. With the assumption that we were going to add more to it today. So what I have a chart up in front of us is, this is one of my favorite trades of all times. This is the VXX over 5 years. And you can see that the VXX never really traded at 3,000. They have to keep doing reverse splits to the VXX because it's just a flawed product. So every time, you know, when we draw a little bit closer in here, so again, you can see over time, it just goes down over time. And, you know, there's occasional moves up in volatility. Anytime this happens, which, you know, obviously it happened last week, this is where I want to sell the VXX and use the way to do this is selling call spread so that I don't have unlimited risk to if the volatility move continues. So we did this on Friday. We went out in December. I figured that, this is not as clean as a normal election. Once the election is over, we go on with our lives and get over it. There may be a little bit of angst going forward. So I did put this trade on Friday with the hopes of adding to it today. Considering that the VXX is down 4 points, I'm not adding to it today, but maybe for whatever reason we see a little bit more volatility. So anytime the VIX gets to be above 20, I like to put this trade on, and it's the one that I chose to do here is selling the 40-44 call spread up here. So you could still get some value on that. Maybe you could ratchet down the strikes a little bit. That's a trade that we did Friday. Like I said, I was going to put it on a larger size, not, obviously we had a big announcement this weekend, which has brought volatility in. So that being said, that's still a trade that I think is some value. The VIX is right around 18 right now. So you could do this maybe in smaller size. The other trade that I'm looking at, and there's always something to trade. It's the beauty about trading is that there's always something that's either in an uptrend or, what I think is pretty interesting. So if we take a look at the XME ETF, this is your metals and mining ETF. It's got a lot of steel names. I talked a little bit about the move in copper earlier. You can go ahead and look at copper, and you can look at this where, first of all, you could see a breakout occurring here in copper. So what names do well when copper rallies? Your heavy metals names, your FCX or Freeport-McMoRan. You can see we're doing something now that we haven't been able to do all year long, which is get into that yearly value area in copper. So very important. Again, it's a weekly bar, so we have till Friday, but 2.23 is the level to watch in copper. And if this is not only going on in copper, but it's going on in all the base metals. If you look at DBB, take a look at what DBB, the base metal ETF, which is copper, aluminum, and zinc. These things are moving really well to the upside right now. So I want to be in equity names that are leveraged to this move that's taking place. And that's the XME ETF. So not only, and this kind of backs it up, so you could play this either the ETF, which is this XME, or you could play this in single names. You could play this in names like FCX. We're also seeing quite a move in iron ore and names like US Steel. You could see the components, by the way, of the XME ETF. So you got AK Steel, you got US Steel, you got Steel Dynamics, and we've been seeing call activity in these single names. If you go out to April and you look at the open interest going out on the call side, it's just ratcheted up here, and these are not cheap plays. These are very expensive plays that they're putting out in April, thinking that there's more upside to go in US Steel. But if you don't want that single name risk of some of these names, then I really like the XME ETF, and I'm long this name right now.
All right, great. Hey, thanks for the ideas there. I like trading VXX as well, from the short side, obviously, and I do UVXY as much as I do VXX. Actually, I started doing a little more volatile. It's just the 2 times. It's basically the same thing, but they're down quite a bit today. VXX is down 11%, and UVXY is down 22% as we're talking. So if you got short on Friday, neither of those, you're pretty happy right now.
Yeah, absolutely.
Yeah. Let's go to Eric, I guess. Eric, what are you thinking as far as profit ideas, either based off of Tuesday's election or anything else you want to throw out there for a profit idea for the week?
There's a couple things I was looking at. So obviously, we know that today the S&P has been up and up big, but take a look at some of these other markets, like gold has been way down today. It was right at even after today's trade. I'm not seeing, again, this kind of goes back to why I said at the end of Friday we might be up, for a couple reasons. I don't see a lot of the tides here. And so I'm going to take a little bit of a different direction, and I'm going to take a look at just doing a stock play for about the next month while things kind of settle out. And you never know, we could have another Florida issue, and let's hope not. But things like this do come up, and so over the next month, a little bit earlier, sitting on the sideline, not being overly active over the next few weeks. I do want to point out, and anybody listening can write this down if you'd like. I'm taking a look at a bullish trend. Scripts holding a ticker for them is ESRX, and reason being is because over the last looks like about 23 years, this this stock has closed higher on an average profit over that month of about 9%. That allows you to do a couple things. One, you could just go in and buy the stock outright. You could do an option play on that, because that'll be the third Friday of the month of December. And so, kind of a boring play, but again, I definitely think it's safe. We're taking a look at some of these other markets, like, I'm going to go back to crude oil. It's testing another level, another floor here, today or tomorrow, or the next couple of days. It'll start to fall here towards the end of the year. But as it's again not really sticking too much with the seasonal trend. I mean, you've seen some pretty good swings over the last couple of days, but right now it's trading in the lower 40s, and so I'm not seeing a really convincing. And then with the volatility on the ES, again, nothing there. Gold is just kind of in a yuck sideways moving market, so that's why I'm just kind of going to sit on the sidelines for the next little while. I'll take a look at that particular stock. There's a couple of others in there I wanted to look at, but that's the one that floats to the top for me that I wanted to focus in on. I guess if I was going to pick a second place, it'd be Southern Company. Exact same day, starting about the 23rd of November. This one actually has been a little bit longer. 28 out of 31 years, it's had an overall return of about 4%. Again, another just safe play, just something to so we're not completely looking at something that's a little safer. Don't want to have to try to guess with these news announcements, with the elections, with whatever can happen after that. I doubt this is going to be a clean break after tomorrow, pointing that it's probably not going to be. So just like that past, I'm not going to jump in and chase anything too crazy. So that's my end.
All right, great. Jim, let's go to you. You save the best for last here?
Yeah, I hope so. Rather than trying to play anything with the election all around it, one thing that I'm going to be kind of trying to determine on a little bit of a bigger picture, because after this week, we're going to be within 6 weeks of the end of the year. And then, of course, we have to figure out a little bit about how we feel about 2017, right? So I just wanted to throw my 2 cents in on what I'm trying to monitor, and that is whether or not I'm trying to come to some conclusion, whether or not there could be a repricing of stock prices as we change presidents. We know that in years past, like 08, 09, 2000, 2001, and other years in the past when we've changed presidents, there's been some significant volatility. And just because they've been able to keep the market fairly firm going into the election, I don't think we can dismiss that history as not occurring, or having no value right now. So, basically, I'm looking at the markets, and I'm trying to keep an open mind. The transports look very good today, right? But they're still over 1,000 points underneath their high they created in 2014. So you've got an offsetting penalty where it looks good here now, but if you put in the big picture, it's still nowhere near the high. And that's true on a number of stocks. And so I'm going to be trying to make some ideas on, how things may shake out, earnings. Obviously, they've been a little bit spotty in the last, foreseeable past, right? And so are we going to play a game of keeping lowering estimates, and then they beat the estimates? So the headline says, Harry beats the estimates, but the estimates have been reduced. And are we going to have anything, occur with the debt that's being created on corporations, where they issue tons of debt and then they take the money, they don't buy plants and equipment, they take it and they buy their own stock? Is there any liability to doing that if the stock prices were to go down and they have all this debt tied up into their stock purchases? Is there an Achilles heel there? And this Julian Robertson guy was, who's a pretty big hedge funder in years past. He made a comment that, with this low interest rate doctrine they've come up with, they have forced a lot of CD buyers and risk averse people into risk assets. And since we've had an 8-year run with no sustained drops, meaning no real curvature of the moving averages where it looks negative. Would these people who are not really risk takers possibly to begin with, how long of a rope would they give a market that started to slip? So, as we look into the end of the year, which could very well, have some type of a rally, the question is, are we going to be able to go substantially higher than the 2200 top on the S&P, unless some of these items that I talked about changed? And I think that's not a bad thing to kind of think about as you go into the new year, because the major trend of stocks is obviously very important. Are the winds of change going to blow? And I think that's not a bad thing to think about and to come to some conclusion of during this period right now.
All right, great. Thanks, Jim. I'll give you 2 minutes on what I'm looking at, and then I'll let you guys say goodbye and let us know any special offers you got at your firm, at your sites, or where you're working, or anything else you want to let us know about. For me, kind of like I said, I'm not looking to do anything around the election. I'll be taking off a lot of exposure this afternoon and tomorrow going into it. I'd like to see the reaction to the election, and then I'll probably play off of that. I don't think we'll get another Florida. I was joking about that, but I do wonder if it is a close race, whether we might have some action leading into Wednesday with a little bit of indecision. We had I think it was the last debate where the moderator was trying to get Trump to say he would concede if the election went against him, and he didn't necessarily say that. So if he doesn't, if he loses by what looks like a close vote, or if he appears to be losing by a close vote and he doesn't concede, that could make for some interesting volatility. And we could certainly find some ways to play that, I think. But assuming that doesn't happen, and if the market does rally a bit, I'll probably be holding out until next week. And I'll be looking to do some volatility plays, either XIV, which is the inverse of the VXX that Christian was talking about. I'd look to go long XIV, or I'd look to go short VXX. Contango should steepen quite a bit once the election is done, assuming it's a bullish reaction, and it will get even steeper next week as we move into the holiday period. The November to December futures prices tend to have steeper curves, so I'm looking to play it if we get some steeper contango in the front 2-month futures, which next week we'll be retiring the November ones and moving on to December. I guess that's about it for me. I'll run through one last time. If you want to tell us anything about your site, anything upcoming, anything we should get excited about, please do so. Eric, let's start with you. We'll go down my list as we started at the beginning. Eric, you there?
Okay. Yeah. Are we back on the line?
Yeah, I hear you now.
Okay, good. Thank you. So sorry about that. I don't know what had happened there, but no problem. But yeah, just kind of wanted to thanks so much for the invitation. I appreciate it. It was good to be on here for the first time, and some great insight. There's some guys on here that's had a ton of trading experience, and so I think it would be wise for the listeners to take a look at what they've had to say. What we're going to do for today is just, we have an introductory offer to our software. I'm going to turn it on here and see if we can screen for just a minute. Okay, I guess it's not letting me. So my website here is just the Trade Miner, so TradeMiner.com, and then there's a /TR. And so with that will come a special promotion that we're doing on the software. Again, it's called Trade Miner, and what it will allow us to do is do that seasonal trends, market analysis, things that we were seeing there, and that's what we were trying to get up and running and squared away. To share it there.
All right, great. Thanks, Eric. And I don't know a whole lot about your site, but I will say that I have found seasonality in my career to be very useful. So I'd encourage people to check it out. You certainly sound like a guy that knows what he's talking about. So
thank you. Yeah, it's a safe play.
Let's say goodbye to Christian here, I guess. Christian, you got anything you want to tell us about your site?
Yeah, sure. Absolutely. You go to TribecaTradeGroup.com, and if you want to be a part of our trading room, we do have a discount code that you could use. You could check it out for the first month, half off. If you like trading analysis and if you like setups, we go over this, some of the setup that I talked about in XME and some of the individual names. We talk about ETFs and single names and watch flow all day long. So if you're into that kind of thing, check us out, TribecaTradeGroup.com. Thank you very much for having me on the call. It was a pleasure as always. So thank you, Rob, as well. And thank you, David. Have a great day, guys.
Thanks, Christian. Let's talk to James now. James, anything you want to tell us about AlphaShark that we haven't been told already, or that you got anything going on over there we should know about?
Sure. Yeah. So AlphaShark, we regularly update our blog on a daily basis with a new and interesting trading idea that is 9 times out of 10 based off of unusual option activity that came across the tape in that same day. So if you just kind of want to get a good idea of what watching order flow is like and how we use order flow at AlphaShark, that's a great place to start. Also, I always offer everyone that is a listener of the Timing Research Show the opportunity to send me an email, james@alphashark.com, if you're interested in trying out our trading room for a little bit for free, or learning about any more of our products or services. I'm pretty responsive. I usually respond within 24 hours, depending on what's going on. So any questions that you guys have, send my way, james@alphashark.com, and I look forward to hearing from you.
All right. Thanks, James. Good talking to you again. How about you? What about anything going on at Option Professor we should know about?
Yeah, well, I think the people who want to learn more about the uses and the risks of all the different option strategies would be well served to get the 7 DVDs that the Option Professor does have for them. We have strategies that'll go over, cash flow, such as covered call rights, put rights, credit spreads. And then we also go over different type of two-sided trades like straddles and strangles. And of course, with the volatility VIX, in a range anywhere between 11 and 13 on the downside and 20 to 25 on the upside, sometimes different strategies can be very, very effective in that environment, and others obviously are not. And so having a clear understanding about the use and the risk of all the different tactics, has to be of some value out there. So I'd suggest everyone try to take advantage of those 7 DVDs and pick them up.
Excellent. Thanks, Jim. And thanks to all of you. I always enjoy getting to come on the show, and it's always great when we get to talk to, well, it's nice talking to some of the same people sometimes and meeting new ones. So we got a mix of both today for me, which was great. Those of you that want to learn more about quantifiable edges, you can just go to quantifiableedges.com. There's always a free trial to our gold subscriber package there. Also, InvestiQuant, you can go, and we have a free trial at InvestiQuant as well. So go ahead and check either of those out, or both, actually. And I will be doing a webinar next week, so you can keep an eye out on that at InvestiQuant. That'll be focused on swing trading and my swing trading newsletter that I have at InvestiQuant that looks at a lot of the InvestiQuant systems and how I utilize them. So thanks, David, and thanks everybody. It was great getting to be here again.
All right, thanks guys. Great show. Just want to remind everyone watching to, if you haven't subscribed to our YouTube channel yet, just hit the button to do that, and you'll get updates through YouTube on future shows and other presentations we might do in the future. Also, you can go to TimingResearch.com and download any of the past reports or watch any of the past shows there. And be sure to join us next week. Jody Samuel is going to be on for the first time. Also, Roy Swanson, Andrew Keene, and Steve Lentz will be back, and Dean Jenkins will be hosting. And so just want to give a final thanks to all my guests for this week. Eric Atkins of Gecko Software and TradeMiner.com. Thanks for it's your first time on the show. Thank you for joining us. Christian Fromhertz of TribecaTradeGroup.com, James Romelli of AlphaShark.com, Jim Kenny of OptionProfessor.com, and Rob Hanna of Investaquant.com. Thanks, guys.
Thank you.